hello friends, welcome back. It is me, Business Barbie.
I'm wearing black today because I'm still mourning Ryan Cohen's morals, but that's a topic for another day. Today,
I'm going to tell you 5 tips that you can incorporate into your trading immediately
that will make you more profitable and a better trader. Tip number 1, you need to know what kind of trader you are. Trading and investing are these big blanket statements that basically cover a whole industry. But that's not good enough. You need to know what kind of trader you are, and that should be based on your goals, your capital, and your character.
I put together 4 trading styles that I think do not get clarified enough. Day trading.
Huge word. Everybody thinks they know what it means, but basically day trading really just means that you intraday buy and sell a stock the same day.
Next style would be swing trading. Swing trading is the less adventurous version of what we just talked about.
Basically, a swing trade you hold for a couple of days.
It is mostly based on some solid momentum and not just one big headline like your day trades are. So let's say a company has earnings coming up in 10 days. You can normally see people betting on those earnings. And then there's scalping, one of my personal favorites. It's like day trading on steroids. You have a high frequency of trades. Sometimes you only stay in the trade for 30 seconds. Sometimes it takes you 10 minutes, but your exposure to the stock and to the trade is minimal. All you base it on is volume and momentum.
And what you need to do is you need to be out of the trade before everybody else wants to be out of the trade, because that's how bag holders are born.
Then there is trading on fundamentals.
Basically what you would consider buy and hold. Now, there are ways to evaluate a company, and that's what you do. That's your due diligence. You go in, you look at the balance sheet.
How much income, how much assets, how much debt,
and what's the future projection for this company. So now, in this environment, I wouldn't hold anything for nothing. I would drop it like a hot potato. But if you have money to invest that you don't need for the next 10 years, hey, go ahead, buy the dip, and it will dip much more than it already has. Bottom line, all roads of investment lead to capital
and lead to success if done correctly.
Now it's your job to find out where you feel the most at home.
Because we all have a specific character. I, for example, I'm an introvert.
I don't mind sitting in my office, staring at screens and looking at chart patterns for 16 hours a day. I'm having a great old time. So I can scalp, I can day trade, I can swing trade. But that may not be you.
Tip number 2.
Are you using the right broker for your trading style? Think about it that way. We're not doing it like the old days anymore, where you have to put on a 3-piece suit, go to the New York Stock Exchange and just yell into the crowd.
But we have a whole new era of brokerages that make it feel like trading is supposed to be a game.
It looks similar to video games, and it really isn't. It takes out a lot of the seriousness that you should have approaching that topic.
Let me take a step back just for 1 second, because I want you to look at a graph that I made just to explain what your brokerage firm actually does. It's a fancy middleman between you and the stock market. So you make the decisions and they execute. But does your brokerage firm have what you need for your trading style? Using my own example, I like to trade pre-market, after-market, momentum-based stocks. So naturally, I need a brokerage with the maximum amount of trading hours in a day. Trading hours are a big deal. And if you're like me and you like to have control of your money as much as possible, you need the maximum of trading hours. I made you a little graph just to explain how many hours outside of the main trading session would be available to you with the right brokerage.
Tip number 3, playing hard to get. Hear me out. I made a career out of it, so now I'm in my mid-30s and single, but it works quite well when you apply it to trading. Mindset is everything. If you are entering the market today, you encounter a completely different environment from how it used to be. Now you have social media, chat rooms, boiler rooms, fake gurus, all of that stuff. And all of them want one thing. They want you to make a mistake. And they want you to panic. The goal of this is to create what the hip kids call FOMO, fear of missing out. It's basically a fake state of panic that always makes you feel like you have to chase the next big trade. And you need to stop it because it's not real. So now that you left that panic-inducing artificial environment, what do? Well, you picture yourself as the gatekeeper of your own capital. You protect your money. You don't chase any stocks. They audition for you every single day based on their news and their setup to see if this trade is really good enough for you to throw the hat in the ring. Tip number 4, super important, super easy, extremely underrated. Look at your trades and chart setups in different time frames. Let me show you on the example of Tesla, because we all seen it, we all traded it. So this is the 30-minute chart for Tesla. Each of the candlesticks you see is 30 minutes. Now, if you read that chart pattern correctly, you are tempted to take profits because you see that there's a reversal coming, retesting old highs. But then you take a step back and you zoom out to the bigger picture. So now look at this chart. This is Tesla on a daily chart. So now suddenly you may contemplate actually adding to your position because it seems like it's having a reversal. Obviously, your next move is based on your trading style and your goals. But no matter what your goals are, no matter what your style is, you need to have the full picture and be informed. Number 5, for the love of God, use your indicators. If you are trading without indicators, it's like having a blindfold on and just trying to somehow figure out what's going on. There's no need for that. We already covered the fact that trading is risk management. That means you have to have as much information available as possible. So all those amazing indicators are out there, use them. They might be a little intimidating in the beginning, but let me show you the 3 that I have on my chart all the time. It's volume, it's RSI, and it's the MACD. Those 3 work for me, work with my trading style. Let me tell you what they do. Volume. Volume means movement, and that's what we're looking for. So basically, your volume shows you how many shares of this stock are being traded right now. And how does this look in relationship to what it normally trades like? A huge increase in volume normally is a very clear signal that the stock is going to make a big move. The same is true on the opposite side of the spectrum. Volume dries up. It is a pretty good indicator that the trend line will not continue. As a momentum trader, I always have MACD in my subchart. I would love to spell out for you what it means. I'm going to put it right here, but I tried 18 times and English is my second language. We're not doing it. But I can tell you how to use it. You have it on your subchart and it basically incorporates the trend, the momentum, and the volume. It fluctuates between the 0 line where you see the little green stuff and the red stuff, which basically just represents buying power, selling power. It normally gives you a really good idea where the stock is headed. One of my favorite subcharts is the RSI, the Relative Strength Index. I want you to take note that I can actually pronounce that one. It moves around between 30 and 70. Under 30 is considered oversold. Over 70 is considered overbought. So you are holding a position and you see the RSI go over 70, that's where you should be taking profits. You are holding a position and the RSI goes under 30, that means it's oversold and it's a good momentum for you to buy. On a side note, and I'm going to make a separate video about algorithm trading, but most of you know that you're not just trading against people, you're trading against computers and algorithms. And they take their cue from indicators. So those are the 5. You incorporate those today, your trading will improve immensely. But then there's one bonus tip that actually made me change my ways when I didn't expect it. Number 6. When you've traded for a while, you sometimes get complacent. And it takes a different trader, a better trader, to call you out on it. One of my trading partners said, if you don't remove your bias about bullish or bearish and good or bad from your conception of trades, you're never going to be the trader you could be. What that means is, subconsciously or consciously, we all identify with either bears or bulls. And if you're aware of that, you can detach that. So the goal is to not identify as bull or bear, because subconsciously or consciously, it has a negative or a positive swing to it. Now, if you can neutralize that and you step back and you don't look at it as bullish or bearish or winning or losing, but simply as movement, it doesn't matter. Movement means opportunity. Movement means range. And it can be down and it can be up. And it doesn't matter as long as you're there to capture the move. Well, look at you. You made it to the end of the video. Good for you, learning your stuff and improving. Whoever said you have the attention span of a hamster was wrong. So now, just like every single video, we come to the public service announcement that has absolutely nothing to do with what we just talked about. It's just things that need saying. Starting YouTube is an adventure for me so far. And one of the adventurous parts is getting feedback from people I never met.
So one message really stood out to me where a nice guy said, I enjoyed watching your video, but I didn't for 1 second consider taking your advice. After a bit of reflection, I do understand that I do not look like a typical stock guru. So I thought I employ my friends. You see this? This is me and Bill. We go to the laundromat every Sunday and we talk about insider trading all the time. Not good enough for you? This is me and Warren. We go bass fishing at least twice a month. And everything I know, I get from him. So what I'm trying to say is, I understand that you don't want to take investment advice from some blonde girl with really impressive cleavage. But I know you will take any advice from a middle-aged white man.